So I just went over Cleanspark's Q1 earnings report and it was not what I expected. In this video, I'm going to talk about the numbers and share my thoughts on how this conference call went in comparison to the previous conference calls. But before we go ahead and dive into these numbers, I want to say that I really liked how fast they got these numbers out. When we think of the companies that show their numbers first in an earnings season, it tends to be the much larger market caps who set the tone for the rest of the companies. So to see Cleanspark go in front of companies like Marathon, Riot, and Hut 8 is really nice to see because it sets the bar for these other companies. Because in my mind, if they produce good numbers and the other companies produce better numbers, then Cleanspark won't really get hit by it. But if it was the other way around where the other companies showed their numbers before Cleanspark did and Cleanspark had good results whereas the other companies had great results, they could get hit because they're being compared to these other competitors. And speaking of reporting numbers, let's go ahead and look at what Cleanspark did this past quarter. So when we look at the quarterly revenues, they increased from $2.3 million to $41.2 million. That is an increase of 17-fold. And put it this way, their Q1 revenues was over 80% the entire last year's revenues. That's insane to think about when you consider Cleanspark's projected revenues for this year. And when we compare it to their previous quarter, revenues increased by $14 million, which is over 52% quarter over quarter. I mean, when you think of a growth company, you would think 52% year over year is solid growth. But 52% quarter over quarter is on a whole different level. They also had a profitable quarter with net income reaching $14.5 million. That is an EPS of 35 cents per share. And when we compare it year over year, they had net loss of 32 cents per share. And when we compare it to the previous quarter, that's an increase of over 50 cents per share. Now, even though this is a great number, we want to make sure that they will continue to grow profitability before we come to any conclusions in terms of how it will impact shareholders. But the CEO, Zach Bradford, did say that they will continue to grow profitability this year, which is exciting to hear. Now, one of the most important things when it comes to EPS is the number of shares has a huge impact in terms of how much EPS a company would be able to generate. If we compare Cleanspark to the rest of its competitors, they have an extremely low amount of shares even with the dilution that we experienced this past year. I mean, Marathon has over 100 million shares outstanding. Riot has 115 million shares outstanding, and Hut 8 has over 160 million. So Cleanspark has between a half and a quarter of the total amount of shares as the rest of their competitors. And that means achieving higher earnings per share is easier to attain. This is extremely important when you consider what funds are going to be looking for this year. As I said in one of my previous videos where I've talked about my investing strategy for 2022, I believe that larger funds are going to be looking into companies that have a smaller market cap that are either going to be profitable this year or are already profitable. With Cleanspark generating a profitable quarter and a good probability that this will continue, this could be a company on many funds' radar, especially when you consider how undervalued the company is according to their assets. With a market cap right now of somewhere around $400 million, it doesn't make any sense as to why the company has $418 million in assets. So unless you believe that Cleanspark's assets are going to lose value over time, the current valuation doesn't add up, especially when you consider that they've added over $100 million to their assets in the past 3 months. Another thing to pay attention to is their total liabilities right now is at $24.1 million. So they have over 17 times the amount of assets as they do liabilities. Now let's look at the balance sheet. The company currently has $5.2 million in cash, which for a company that has a market cap over $400 million, that doesn't sound good at all. But their digital currency, in other words, the amount of Bitcoin that they have on their balance sheet, adds up right now to about $30.2 million. But what I think is most important is how they are utilizing their Bitcoin. In their earnings call, their CFO, Gary Vecchiarelli, said that as a miner, Bitcoin is our functional currency and how we get paid. Therefore, we think it makes sense to use Bitcoin to generate even more Bitcoin. Now, monetizing Bitcoin does not only mean selling Bitcoin into the market. We expect to deploy advanced strategies to recognize further yields from our Bitcoin holdings, and we have recently established new relationships to help develop these yield-producing strategies. This comment from the CFO is super important because this comes down to what is the most optimal way to use Bitcoin. Many people, and honestly many companies, believe it makes more sense to hodl all of your Bitcoin. It actually makes more sense to use and lend Bitcoin now to get more miners. We see many Bitcoin mining companies spend millions of dollars on the best mining rigs right now. And the problem with this strategy is technology is advancing rapidly in this sector. And so we could possibly see new mining rigs start to come out in the near future. And with all these companies putting money towards the best mining rigs right now, they won't be able to have the money to actually buy these new mining rigs when they come out. And the team at Cleanspark realizes this. Right now, the goal is to get the largest amount of hash rate possible. And so being able to use their Bitcoin to get more miners to increase their hash rate, in my opinion, is a really smart move. The only exception to this is if Bitcoin skyrockets in the short term. But if Cleanspark uses Bitcoin to mine more Bitcoin, what they're doing now is going to set them up really well in the future when they're able to mine more Bitcoin at higher prices. Another thing to consider is the company is debt free. Now, the company did say that they will be using debt to get more miners in the near future. And even though this may be a concern to some people, as long as you believe that Bitcoin is going to outperform the interest rates and they will continue to maintain high margins, then adding debt to their balance sheet, in my mind, really isn't a big deal. But I wouldn't worry about this until we get more information about the debt that they're going to be receiving. The other piece of news that I was amazed at is the expenses for mining a Bitcoin. Cleanspark is currently mining a Bitcoin at about $4,500 at their own facilities. That is the lowest that I've seen with any Bitcoin mining company. Now, they do want to expand into the co-mining facilities only as supplemental in order to rapidly grow their hash rate. But the company did say that they want to keep the majority of their Bitcoin miners at their own facilities. So if you've listened to any of my previous videos where I've talked about this company, you have heard me talk about how poor I feel their conference calls have been based off of their struggle to communicate and present their information clearly. For example, this last quarter, I needed to go through their entire 10K and other reports in order to get the true numbers for the company's quarterly revenue and their revenue between Bitcoin mining and energy revenue. But what we saw in this past earnings call was outstanding. The numbers were really easy to read, and their communication was so much better than last year. Now, I did say that the CFO would hopefully help in this process, but I did not expect him to help out this much, and I saw many investors agree with this. The way that he clarified everything, especially about the financing portion, made investors really excited as to what is coming up for Cleanspark. Now, there is another thing that I did want to talk about in this video, and that is the removal of the energy side of the business. If we go back to the last time I talked about Cleanspark, I didn't expect him to get rid of it because that's why many investors got into this company. But I tell you what, based off of the conference call, I don't think many people cared, especially because they got a profitable quarter and the CEO gave strong guidance with growing profitability over the next year. Let's look at the numbers as to why they chose to make this decision. If we go back to an old presentation from July of 2021, we can see that their software energy segment would give them a margin between 65 and 90%. But if we look at the Bitcoin mining segment, we can see that the margins for a $35,000 Bitcoin is at 80%. And that's higher than the average margin for the energy business. Plus, as Bitcoin prices increase, so will the margins. Because Cleanspark is extremely bullish on Bitcoin, it made total sense for them to stop focusing on the energy business and put everything they have into the Bitcoin mining segment. And so even though they are losing diversification in their business, when we look at the margins that they're producing in comparison to the other companies, they will still be able to thrive even if Bitcoin prices fall. Now, one fear that I've seen from people is that there's only a certain amount of Bitcoin that could be mined. According to blockchain.com, all of the Bitcoin will be mined in 2140. Now, of course, the hash rate will be more difficult, so Cleanspark needs to keep up in order to maintain the same amount of Bitcoin. But as I said before, when they spend their Bitcoin to mine more Bitcoin, they will be able to outpace the increase in difficulty. And when I consider all these different things, I can easily see Cleanspark growing their revenues over the next 5 years, even if Bitcoin doesn't increase as much as we think. And that leads to the last piece that I wanted to talk about, which is Cleanspark's mission to become one of the top 5 publicly traded pure Bitcoin mining companies in the world. Now, the main thing that I wanted to focus on is the hash rate. If we look at all the famous Bitcoin mining companies, they would need to pass at least 2 other Bitcoin miners in order to achieve this goal. With the rapid growth of Marathon, Riot, and possibly Griffin Digital Mining, they will need to match similar growth. Cleanspark has projected and purchased enough Bitcoin miners to achieve 4 exahash by the end of the year. Now, this is pretty good, but not enough to match the growth of these other companies. I believe to maintain similar growth, they would need to at least be somewhere between 4.5 and 5 exahash by the end of this year. But one thing that was nice to hear from Cleanspark is they admitted that they could easily beat 4 exahash by the end of the year. And with that kind of confidence, I do think that we could see stronger growth than what we expect. So with Cleanspark moving up as much as it has, do I think that this company is still a buy at current share prices? Absolutely. Because even if Cleanspark is not a top Bitcoin miner, their margins are substantial to be able to give good value to shareholders. If the company does $1 of EPS by the end of the year, which is definitely attainable, they would be trading with a forward PE of around 10. For a growth company that's going to be growing EPS substantially over the next few years, that is insanely low. Now, of course, we need to see Cleanspark prove that they will be able to retain positive EPS. But if they do, I could see this company giving me tremendous gains over the next 5 years. But I hope you guys enjoyed this video. If you don't mind, would you consider destroying that like button? That helps this channel immensely, as well as comment down below your thoughts on Cleanspark's earnings call and vision. Would love to hear your thoughts on that. And if you are new here, hit that subscribe button down below. That way you are notified when new content comes out. Hope you guys enjoyed the rest of your week, and we'll see you in the next one.